Hey traders, Mike here. Welcome to my live weekly trader psychology live stream series where I help you with anything with regards to the trader mindset, the mental challenges that you face, and anything that would inhibit you in achieving trading success. All right, so what I want to do in today's live trader psychology live stream is I'm going to talk about how traders consistently sabotage their trading when things are going either good or even when they are not going well. And more importantly, I would discuss how traders, well, first of all, why traders self sabotage themselves and why they do that, and how traders can overcome this bad habit. Now, before I start with this live stream, what I wanted to do is I wanted to let you guys know that this stream is sponsored by Chart Prime. Now, they offer a suite of algorithmic tools and indicators that can help you with your chart analysis. Now, they approached me last week and they asked me to try out their 6 unique trading indicators that can help you with your trading. Now, what these indicators can help you do is you can essentially add them to your trading view charting platform, and then it will help you assess and analyze the markets. Now, normally I would usually do my own chart analysis. I would draw my own trend lines, determine my support and resistance levels. And then what I would do is I would utilize one of their chart prime indicators. So in this case, what I'm going to do is I'm going to show you an example. Now I have basically added their chart prime oscillator here. Okay, you can see right here. And what I usually do is, as I mentioned, I utilize, draw trend lines, support resistance levels, and I basically extend them out, right? So you can see here, this is a short-term trend here, extending, and then it broke right here. Now, what I would do with this chart prime oscillator, it helped me confirm that this is probably a trend reversal. As you can see, this uptrend here, and then broke, and then you can see right here, this is a indicator for it to go lower, and hence you can see that it went lower. Now, for me, like I bought trading software before, that give me buy and sell signals, and generally most of them don't work, mainly because there's a reason why I rely on my own technical trading skills. Now, what I found is that chart prime indicators gave me further analysis that maybe I've overlooked, or maybe just, as I said again, just validate the type of analysis that I have in terms of the markets. Now, for those who are still new, you're still learning, they have a really good indicator called the automatic pattern detection that helps you find chart patterns to look for. So it's right here, pattern detection. If you click on here, learn more. So essentially what it does is helps you scan for chart patterns that I talked about in my videos before, instead of you trying to look out for them. Now, Chart Prime is offering a 20% limited time offer only for my viewers to try their tools. And all you need to do is just basically, I'll put this in the chat box here. So I will give you guys a registration link, and all you need to do is just click on the link, just show here, and just enter the promo code MSIR. So just hang on a second here. There you go. And then the promo code, which I'll enter in here, is MSIR. All right, there you go. All right, so let's get started and back to the webinar or live stream. All right, so a couple of things I want to talk about today is, again, what's sabotage? What's self-sabotage? Essentially, what it is, as you know, is you're basically hurting yourself, right? So in terms of trading, oftentimes where we are not profitable, we are in a scenario where we're very frustrated with ourselves. We try, we try many things, to make trading profitable, but it just the market just keeps disagreeing with us. We keep accumulating losses over losses, and we basically get to a point where we just hurt ourselves even more. Like even though you are not profitable, you're feeling very terrible. You're feeling very very bad. Uh, Instead of trying to have a more positive mindset, you have a negative mindset and you want to hurt yourself even more. So in trading, that's very very common. Especially you lose control of your emotions. And what I want to do here is just kind of talk about three things and three common mistakes that a lot of traders do to sabotage themselves. Essentially, one scenario is where, for example, and again, I'll tell you that there are things that I self-sabotage myself. So let's just say, for example, there has been a scenario where I'm very, very safe. I'm very, very I control my risk very, very well. I grind out profits. Like maybe, for example, I'll make $100 here, and the next day I'll make $200, or then I'll make $300, or $50, right? So I'm grinding it out, right? I'm being very safe, and I'm essentially taking little bit profits, right? So trying to be safe, not looking to try to hit the home run, but trying to basically gather profits. And let's just say I was able to make I'll mix up. Let's just say $3,000 in a single week. I mean, that's not bad, right? And then next week, you have a little bit of confidence, and then suddenly, on maybe there's a day that you're just not feeling it, and you don't have proper risk control. Suddenly, on that day, you lose, let's just say, $1,000. So I mean, that's a big hit, right, for all your profits. So you lost one third of your profits, and then you say to yourself, well, I'm just going, I'm just going to break my rules. I'm not going to put a stop loss, and then suddenly that loss becomes $2,000. So you're very surprised, right? Suddenly you lost $2,000 where you over the last week you were able to kind of grind out $3,000, and then suddenly next thing you know, you said, you know what, I can't take this $2,000 loss because I have been working so hard last week to make that $3,000. I'm not going to just give up $2,000 just like that. And then next thing you know, all your profits are gone. And then losses, right? So basically, this is self-sabotaging yourself where you were profitable, like you were in profit, and suddenly, because of one mishap, you start sabotaging, you start killing yourself, right? You start hurting yourself because of the mistake that you made, and therefore you're not able to control yourself. You're never able to manage your emotions. And maybe kind of ask you guys, have you experienced that where one week you really did very well, you kind of grinding out your profits, worked really hard for that profits, you're proud of yourself, and then the next week you give it all back, right? Or maybe on one day you did very very well on a day trade, and suddenly the next day you gave all that profit and incurred losses back, right? So that's self-sabotaging yourself. And now another thing is, and this is very, very common, is you say to yourself, okay, I found this really great trade, um, and you got into a position and it's going well in your favor, and then suddenly, let's just say you started having $100 profit, and suddenly it turns to 500, and then certainly turns to 1,000. Now, the trade that you originally put in, you were targeting, let's just say 3,000. Okay, I'll keep it simple. But now you only made 1,000. So you start to kind of think to yourself, well, I got $1,000 profit right now. Should I just take it right now? Because that's this $1,000 profit can suddenly just disappear. So you start thinking to yourself, well, yeah, maybe I should just take it, and then you totally forget, or maybe totally forget that you're supposed to only take profit when it reaches 3,000. But then, or maybe you are aware, but you just say, you know what, I know $3,000 is great, but I'll just take that $1,000. And then next thing you know, once you sell it, the price of the asset that you have sold keeps going in your direction, or keeps going up if you bought, and it actually reaches 3,000. So you took profits way too early. You you plan for that $3,000 profit, right? To take profit at that time, but you exited way too early. So therefore, you didn't make as much. The third thing is you've been very, very disciplined, or maybe you haven't. You get into a trade and you say to yourself, well, I'm not going to lose more than, let's just say, $100 on this particular trade. And then just right when you enter in, you get a $100 loss, just like right away. Maybe because you play too big, but whatever happens. So you get in and you suddenly have a $100 loss. So then you say to yourself, well, maybe I can give it a little bit more room because the price is kind of going all over the place, up and down. Maybe I'll just let it move my stop loss a little wider and put it to 200. And then suddenly, next thing you know, before you planned it, that's the loss suddenly becomes 200. And you say to yourself, well, maybe I should move it to 300 and so forth. So you kind of know what I'm trying to get at is suddenly your small loss suddenly becomes a big loss. So let's just say you suddenly get to 500. You said, well, you're in pain because you originally only planned for $100 loss. Now it becomes 500. Now it becomes 1,000, and then now you're panicking, and then you just basically can't get rid of this pain that you have in you, and then you just sell, right? And you incur, instead of incurring just a small loss, you've incurred a huge loss. So these are three examples of self-sabotage, right? Where you're hurting yourself unnecessarily because emotion took over, fear, greed, scenarios where you're just not thinking logically at all. And this is why, I wanted to go through this live stream with you guys and share with you how do you overcome these type of scenarios. And maybe, if you have in the chat box, let me know what type of self-sabotage challenges that you've incurred, and perhaps during this live stream I can help you with that. So let's kind of talk about first thing. So um, the first scenario with mistake was, let's just say you grind it out and you made 3,000, and then only to have the second week or the next day you've only made or you basically gave up all your profits and actually incurred a loss. So you turn a profit into a loss. So how can you overcome that? Now, what I always do, and what you should guys do, is whenever you made a profit, obviously you will keep trading, right? You want to turn the profit into a bigger profit into bigger profits, right? But know how much of that profit do you want to at least make. So let's just say, for example, you made 3,000 and now you're still trading. You say to yourself, well, I'm willing to risk, let's just say $1,000. So if my profit just goes from 3,000 to 2,000, I'm just going to stop trading, okay, because it's not working. So then that way you kind of plan to yourself, well, you don't know how much you can make, right? Suddenly your 3,000, as you keep trading and it's working in your favor, it could turn into 5,000, it could 10,000, right? 100,000, right? So you're not gonna stop trading on that. So, but you have to manage your downside. Is that you don't want to suddenly give up all your profits or suddenly turn your profit into a loss. So what you should do is say to yourself, okay, once I made a certain amount of capital, okay, how much am I willing to risk on that? And that will help you at least retain some of your profits. All right, second point, you take a profit way too early. Okay, now this is a scenario that happens quite often to many people because, especially when you're not doing well, you're afraid, right? Like because you've been losing, and now you make money, so you kind of want to just take the profit, right, and run, right? Like, but that's not what successful traders do. What successful traders do is, if a profit is going in the direction, they keep trading it, okay, or they keep holding it. So in this type of scenario where you have a target in mind, so let's just say you bought a stock at $10 and you're not going to sell it until $11. Well, it doesn't get to $11, it just gets to 10.50 right now. So it hasn't reached your target profit price. And let's just say, for example, you want to at least hold on to some of the profit. You can move your stop loss to a little bit higher, right? Either to break even so that you don't lose money, number one. Number two is you can maybe take some profit off the table, okay? It's not obviously ideal because, let's just say, in the last scenario I said is you made 1,000, but you were looking for 3,000. So instead of selling your entire position, sell half. So then that way, at least you feel comfortable, and then hold on to the rest until your profit target price. That could help you. The other scenario that could also help you is if your objective is to make bigger capital. It doesn't make sense for you to just sell, like only make 1,000, for example, and you have to be comfortable with that. So if you're targeting making, let's just say 10,000, you're not going to take profits when it's only 1,000. So your scenario, your mindset is a little bit different. Your mindset should be, well, I'm not going to take my small profits. Yes, those small profits could suddenly disappear, right? You're maybe up $1,000. Suddenly it went down to break even, and you get out and you lost. You say to yourself, I lost $1,000 in profit. Well, you shouldn't think of it like that because you're targeting 10,000. So why would you be taking profit 1,000 when you're looking to make 10,000? So it just doesn't make sense. So if you think it from that logical point of view, you should not be taking it because you were targeting 10,000. Now the third scenario, as I said to you, is turning a small loss into a big loss. Now, obviously, again, in that type of scenario, you just basically don't follow your stop loss, right? You say to yourself, I'm only going to lose 1,000, or I'm going to exit once it reaches my stop loss price. You don't exit. I mean, the mistake is on you, right? So you have to follow that. It's not really psychological, just because you don't want to incur that loss. So the scenario that you want that will help you, and what I suggest is you have to be prepared to lose money. So you have to be comfortable losing money. Like nobody wants to lose money, but the reality is in trading, you will lose money. I guarantee you, 100% you will lose money. The key, as I said in my other live streams before, is as long as you make more, then you lose, then you win, right? It's very, very simple. So when you say to yourself, I'm not going to lose more than X dollars per trade or on this trade, once it reaches that, you don't think and you just get out. Okay? It's either you putting a stop loss order there or you have to mentally just take action right away. All right, so I'm going to open the floor to any questions that you guys have. I'll share some of, if you guys have any other sabotage type of stories, please feel free to share them in the chat box, and I'll give you my take. All right, so let me just go through this. Oh, hey Richard, yeah, happy Sunday as well. Ben says risk management is the key. Take some off. Yes. So I'll kind of elaborate a little bit further on what Ben said. Is Ben's right. Is if you don't feel like, especially in a losing streak, right? Let's just say, for example, you lost $10,000. Okay, for example. Okay, it's not a definitely not a small amount, and then suddenly now you have a $2,000 profit on a trade that you make. So then you're thinking in your mind, well, now only an $8,000 profit. So maybe if I try to make more $2,000 profits, I make it five $2,000 trades, then I can basically go back to break even. So there's two scenarios. Obviously, one scenario is it helps you reduce your loss, right? It makes you feel better. Instead of $10,000 loss, you only lose $8,000, right? But what if that trade that you entered in had the potential to make 10,000, so that on one trade you basically recoup back all your profits, right? So obviously you don't know, right? We don't know whether that 2,000 profit suddenly becomes 10,000, or suddenly that $2,000 profit suddenly becomes zero, right? So um, what can make you feel better? It may not be the right decision. What can make you feel better? Take half off. Take some profit off. Let's just say, for example, you have a $2,000 profit. Take $1,000 off. Okay, now you're only down 9,000. It still hurts, but it hurts less. So it's not the logical way, because if the trade keeps going higher, you basically, again, what I said to you earlier, you're exiting your profits way too early, but it'll psychologically help you in overcoming and make you feel confident. And if that helps you, great, right? Because the worst, another bad feeling is, let's just say you made 2,000, you didn't take the profit, and then it becomes back to zero. You're stuck with 10,000, and you start to think and um, start to think to yourself, oh man, I should have taken that $2,000 profit, and then you get angry at yourself, right? So there's no right or wrong. What I will say is that if you if you if you feel that it makes you feel better, take some off. All right. Dennis says that's the key, avoiding pain on losses. I let almost all my profit evaporate because I felt foolish, as I tried to double down rather than taking a small loss. Yeah. So Dennis talks a very interesting point. Has what I discussed is it's it's very very hard, and this is why for Dennis and for you guys is you have to accept losses. Like if, for example, if you put your stop loss and you lose, let's just say 500. If you think 500 is way too much, then reduce it. Okay, what's it? 400? Is that still painful? Okay, maybe more. 300, 200, right? What's the amount that you feel comfortable losing? So you have to get to the point, right? And let's just say you're only comfortable losing $10. Okay, for example. Okay, I'll make this up. Obviously, if you're only going to be risking $10 when you do win, for example, and let's just say it's a 2-to-1 risk reward ratio, you make $20. Well, $20 is not great, right? It's not a huge amount of money, but the fact is you're only risking $10, right? So as you build over time, maybe as you make $20, you suddenly make $10, you suddenly make $50, adds up, right? To, let's just say suddenly you made $100. Now, instead of risking $10, maybe you risk $20 per trade, right? So then when you win, now you make $40, right? So forth and so forth. So it has to start off with, you have to feel comfortable losing. And part of one of the skills in terms of trading is the ability to take losses and move on, right? Versus a scenario where you have such a enormous, gigantic loss that you just can't recover from, right? And again, I'll talk in another live stream that I scheduled. Is I know of a trader who lost $1 million. I mean, how can someone recover from that, right? So that's where, keep your losses small and be comfortable with losing money, and money that you can afford to risk. All right. Wake up, time to sleep. Okay. Faz Rashid. Have my problem is I have a strategy, but when I've been looking at the charts, I don't follow my plan, just place trades on looking at the charts. Okay. You can maybe elaborate a little bit further, but I'll just kind of uh, yeah, you have to elaborate a little further, but I'll just kind of assume there's certain things, if you can kind of give me a little bit more detail. What I would say is that it sounds like when you look at the charts, like you have a plan, like you've written down your plan. Now you're looking at charts, and the price is going up and down, or going in your direction or going against you. You're just so fixated on the chart that you're not really following the plan. So I'll kind of give you some suggestions. One is, why are you looking at the chart? Like if you have a plan, you're going to buy here, you're going to exit here, you're going to take profit here. You looking at the chart's not going to change anything, right? Now, I will say, let's just say the markets change, right? Start changing according to what you thought. And then obviously you need to look at the chart and say, okay, well, it looks like, for example, you saw a chart that's steady, like very steady going up, and you're looking to buy, right, at a breakout level. And suddenly it goes wild, right? Of course, then based on your original plan, you should maybe either change your stop loss or maybe exit the trade completely because something's changed, right? But if it's something that's moving normally, then why are you looking at the chart? The chart, you look at the chart won't change anything in terms of your plan. So all you can really, like, quite simply, what you can do is you can just place your order, right? It hits your stop loss, it hits your stop loss. So you have to follow your plan, right? Because you put a lot of effort. Like sometimes I had scenarios before where I spent hours on my plan, and then basically I don't even look at it. I said I did all my research, and I said, okay, I'm going to buy here, and I know this is going up because of this, and I'm going to exit here and all that stuff. And then suddenly when I look at the chart, I disregard my chart or disregard all my research and just focus on chart and start day trading in and out instead of just sticking to my plan, right? So what I would say is you can look at the charts, but make sure you follow your plan. Gentlemen, wake up, it's time to sleep. What was the first broker used to escape the PD, the pattern day trading rule? It depends on who your broker is. I can't really speak because when I was doing day trading, there was no PDT rule. This is way back in 1999. So I can't really give you any suggestions on that. Uh, what I will say is that if you, because there's a pattern day trading rule, is that if you execute more than a certain number of trades, you need to have a certain amount of capital in your account. So again, I can't really answer what that is. What's your favorite setups? Again, we'll talk a little bit more about psychology here. You can kind of ask me those questions on my other stream that I'll talk to you guys a little bit more later. Then says, look at the chart may aggravate your emotions to sabotage the plan. Yes, right. So Dennis is right. When you, like, it's thrilling to look at your chart, right? It's going up and down, and you're fascinated with all the activity, but really, quite frankly, what's your plan, right? What was your plan? Because you may have seen some of the commercials before about showing about from brokers showing people day trading, and like it's exciting. It's like a sport. It's like you're playing esports, right, type of thing. That's not trading. Like you can trade in some sense, kind of like, let's just say, scalping, like in and out type of thing, but quite frankly, not a lot of people in this world can scalp consistently day after day and day after day profitably. A computer can definitely do much better than us as humans, right? Because we have emotions, right? Or you run algos that can consistently do that, right? So we want to avoid trading scenarios where it affects our emotion, right? Like, we're humans. We're happy. We're sad. We're angry. We're nervous. We're greedy, right? All these emotions essentially affect me as a trader. Um, so if I'm fearful, even though I'm in a trade, I might take my profits too early. If I'm greedy and I'm losing money, and I said, oh, this is going to be the home run trade, you don't exit your loss, right? When you are nervous, you're afraid to put on the trade that you did all your research on because you're afraid to lose money, right? All these emotions affect us as traders. And this is why, I do these live streams, and I'm really passionate about trading psychology, is because emotions, psychology affects us. We are our worst enemy in terms of trading. Like, the knowledge, the skills that we have can be trained, can be taught, can be replicated. on a daily, weekly, monthly, yearly basis, right? In terms of being able to consistently pull money from the markets. But us, right? We need to focus. You need to focus on yourself, how you can minimize these emotions so that you can think logically in your trading. And then by saying, looking at the charts aggravates your trading, like it makes you emotional because it's going up and down, and you're looking at all these things, and watching CNBC, Bloomberg, and like so many things are going on. Of course, you're emotional, and that's why it affects you as a trader. Okay, any other questions that you guys have for me? All right. If you guys have more questions, please type them in the or send me an email or type them in the in my videos in the comments section. I'll be able to answer. I check those comments on a day-to-day basis. So what I want to also let you guys know is next week, okay, my live stream is going to be talking about one big trade, okay, helping you guys look for that one big trade. What are some of the psychological things that you need to keep in mind to help you look for that one big career defining trade, that will help you make a lot of capital and help you achieve financial security. So make sure you guys attend that next week, because I'm going to pack that live stream with lots of information for you. And also, I just want to let you guys know, I will be launching a stock market portfolio live stream starting next week. I think I've set the date for next Wednesday. I'll let you guys know more about that, but essentially you'll be able to follow along in terms of the trades that I make, and how I manage my portfolio. Essentially, I want to show you guys what the type of trades that I look for, how I look for them, and hopefully you can follow along and learn a lot from me. All right, guys. Thank you all for attending today's live stream session. Hope you got a lot of information. And again, feel free to reach out to me, contact@mikesir.com, if you have any questions. All right. Take care, everyone, and enjoy the rest of your weekend.